Talking about MCX, right? The SEBI has paved the way for options trading in commodity exchanges, but there are some riders. So let's find out more. Mrugank Paranjape, the MD and CEO of MCX, joins us now to talk about that. Mr. Paranjape, good morning. Can you start by telling us when can you launch the first product now that the SEBI guidelines are out?
As we saw, the guidelines from SEBI are very clear in terms of how we would look at which products would qualify. But having made that decision, we need to look at various aspects before we really say which will be the launch date. So the first and foremost is how do we really build the awareness and make sure that the entire end-to-end value chain is able to participate in whatever contract we choose. Second, we will have to get a whole host of mock trading done. And last but not the least, but we do have a CBDT clarification awaited on the treatment of CTT or STT, whichever way we look at it, on some aspects of the contract. Our view with the approval process and with our own launch activities is that it is something like a 45 days from now that we should be all looking at trading to commence in options contracts.
Okay, Mrugank, good morning. So how big is this an opportunity for your company?
So I think, in terms of, and since you said a vision or something which is very long term, generally we don't comment about market cap, and I won't do that even today. But when it comes to the longer term vision, I have always maintained this, that let us just look at what happened in the equities market. 20 years ago, we had a nascent regulator, 2 or 3 years of SEBI had gone by, we had one product, we had tremendous issues with our back end, and we had very little institutional play. 20 years down the line under SEBI, I think this market has really become one of the top-notch markets in the world. So by a very similar analogy, I would say commodities. SEBI has been our regulator for the last just about 2 years. We used to have only one product. Now we will have a second product enabled. We are seeing institutions being allowed into this market. And on the back end, which is really the warehousing with WDRA and all the other initiatives, I think it is again a positive story. So in that sense, if the growth that India achieved in the equity derivatives in the last 20 years is an indication, then that is what I think is the potential for what we could do in the next 10-15 years in the commodity derivative space as well.
Okay, MCX did consolidated sales of nearly 240 crores, and analysts say they can see FY18 top line growth at nearly 40 to 50%. Can you achieve that?
So I think when we look at commodities and how they will contribute in the longer run to the revenues of the exchange, it is very difficult to, of course, fathom a immediate quarter-on-quarter or immediate financial year number. But in the long run, and I would take that long run to be like over the next 3 to 5 years, what do we really see options contributing to the bottom line of the exchange, if I may say so? From our perspective, if I look at the international experience, if I look at then how options in general have done better in India as compared to the international experience, and therefore what sort of impact do we think will happen, I think in that 4 to 5 year range, we believe options will contribute maybe about 40 to 50% of the total revenues of futures in the exchange total earnings. So that's the sort of uptick that we expect will come from options in the long run.
Okay, and can you tell us a little bit about what the expectation is as far as sales are concerned? Can sales double in the next 3 to 5 years?
Clearly, if you look at the exchange and its growth, there is what I would call an organic growth, which is essentially on what we do today, which is the futures business. Here, the growth would come from maybe a few more commodities that we will launch, and of course with increased participation. Now we have been delivering a 8 to 10% growth in the last couple of years, and that is a number we believe is definitely sustainable in the next couple of years. If we then look at the new developments, and these new developments are in the form of products, whether it is options, whether it is index, and whether it is complex derivatives, then we look at participation of institutional, where we start with AIFs, but hopefully even culminate in banks. And lastly, in terms of increased distribution, all of this, we believe, will add another 8 to 10% to that growth. So from a growth perspective, yes, in the next 3-4 years, if we look at that sort of a trajectory, a 15 to 20% growth means that in 4 to 5 years, you could see a doubling of the revenues of the exchange.
Okay, so even after all the products are introduced, the revenue growth should not be 40 to 60%, but more like 15 to 20%?
I think if you're asking whether, once we have almost all the options introduced, what do we expect? So I think, like I said, growth rate in terms of revenues it is realistic to say that 15 to 20% is a more realistic number, even when you look at all the options contracts being baked into those numbers.
Okay, thank you, Mr. Paranjape, for joining us and giving us your view. That's the word coming in from MCX. That could be one stock in focus today. Let's take a short break. When we come back, we'll be just in time with the pre-opening rates. Don't go anywhere.